Hi, this is Matt Dimitroshin of Telemus Capital with the week in review for the week ending June 7th of 2019. After a rocky month of May, markets were off to a tear for the first week of June, marking the best week of performance in 2019. The S&P 500 was up 4.4%, while the Dow Jones Industrial Average snapped back 4.7%. Tech-heavy Nasdaq Composite appreciated 3.9%, while the Russell 2000 Small Cap Index was up a mere 3.3%. All 11 economic sectors within the S&P 500 showed gains on the week. At a conference this week, several Fed officials acknowledged concerns over trade tensions. In fact, Fed Chairman Powell commented that the Fed will act as appropriate to sustain the economic expansion. This has led many to conclude that the Fed may consider lowering its interest rates. This, in conjunction with the weak jobs report on Friday, where non-farm payrolls only increased by 75,000 jobs, have now led the market to conclude there's an 85.6% likelihood that the Fed will cut rates at its meeting at the end of July. The expectations for lower interest rates also pushed yields on treasuries lower on the week. The yield on the 2-year Treasury fell 10 basis points, while the yield on the 10-year Treasury fell 6 basis points. As evidenced in the chart on the slide, you can see the yield curve coming a month ago, marked by the green line, is much higher than what it is today, which is the yield curve marked by the red line. The dollar fell 1.2% on the week, while crude oil, which had been beaten down of late, stabilized and was up 0.8% on the week. That concludes the week in review for the week ending June 7th. Thank you and enjoy your week.